How are you? And tell us a little bit about the business. And you guys seem to be doing partnerships and doing some different things. How do you describe the company and all that you can offer a customer?
Sure. Well, first, thanks for having me back, and it's great to be with you. So we've been on this transformation journey for about 2.5 years now, since the Delta-led investment in October of 2023, at which time I stepped off the board of Delta. You mentioned I was on the board to run the company. And the idea behind that investment and our go-to-market strategy from then forward through today and beyond really lies in a unique proposition that we think we are exclusively trying to deliver to our customers in private aviation. This idea of a solutions platform or a solutions toolkit spanning across premium commercial through our partnership with Delta and private aviation on a flight-by-flight basis. So whether you're a member of Wheels Up, and we're proud to have 3,000 members of our programmatic offering here in the United States, or you're a customer who accesses private aviation through our leading global charter business. The idea is to provide the right plane for the next flight, not for every flight, as some of the other models in the industry do. And so we're 2.5 years into this transformation. The first quarter was a very consequential quarter for us because we hit a couple of very important milestones. We announced about 1.5 years ago that we were going to be replacing our entire jet fleet by the end of 2027. We, in fact, finished that 1.5 years early and are now completely out of our legacy aircraft types and into the two fleets of the future for us, the Phenom 300 and the Challenger 300, which have been performing as expected. And so we're very pleased with that. We also have sunsetted our legacy memberships that were supported by those fleets and are now exclusively offering to our customers memberships underpinned by those Phenom and Challenger aircraft.
So no more King Airs, for example?
We're still flying King Airs.
Okay.
It's a much smaller part of our mix going forward. But again, we can offer any customer any aircraft, whether it's a King Air, a helicopter, a seaplane, or a Global 7500 to take them around the world. Our business consists of two parts. And obviously the part we're best known for, the original business, is our membership business. And that's half our company. But the other half is this global charter business, which enables us to provide customers the right aircraft for the right mission for their next trip. And by the way, if that's a commercial need, if you're flying from New York to Atlanta and there's a bunch of Delta flights, we of course are happy to see our joint customers flying on Delta. And when they need us for a particular trip, whether it's on fleet or through our global charter business, we want to be there to provide the right solution for that mission.
Why did you transition from those older Citation 10 and Hawker aircraft to the Phenoms and Challengers? Wouldn't it have been cheaper to just keep the older aircraft, or was the maintenance getting to so high that it was more expensive to carry those?
Yeah, many of those aircraft were no longer in production, and the reliability of those aircraft were not at a scale and a level that were appropriate for the kind of operation we want to run. One of the very first things we said when we started this journey day one was we want to be the best run private aviation company in the industry, that we were going to follow the Delta playbook to do that. We moved the headquarters of the company day one from the sales office, if you will, in New York to the operations center in Atlanta, which is where we're all based. Leadership is based, where we run the company out of. And we've been on an operational turnaround journey as well. We publish our operational stats every quarter. We're the only private aviation company to do that. And we're hitting the cover off the ball operationally. We're running at over 99% completion. Half our days have no cancellations. We're running at over 92% on time. We had 14 days in a row to start this year without a single cancellation across over 1,000 flights. That wouldn't have been possible 2 years ago, and it wouldn't have been possible on our legacy fleet either. These new aircraft that we're flying are much more reliable. Maintenance availability is higher, utility is higher, efficiency is higher. The unit economics of the fleet are very different.
I'm curious, too, how much cash Wheels Up has, and when do you expect to become sustainably cash flow positive, George?
Yeah, so we have ample cash and liquidity now, and we, of course, raised $165 million as we announced with our quarterly results this week. We had our first positive EBITDA quarter in Q4, and we were expecting, by the way, Q1, which is a seasonally weak quarter, to be negative again. But we're on the path to sustain profitability, and we see the performance of the business model and the fleet we now have delivering that in the not too distant.
Will that simplified fleet materially improve margins as well?
Absolutely. The unit economics of these new aircraft are very different than the legacy aircraft that we've retired.
What about Delta, though, and that relationship? Will they need to continue to be pumping cash into you guys?
The cash we raised in this quarter funds our growth plan well into the future. It's a little bit of a function of how fast we grow. We are returning to growth again. Underneath our relatively flat revenue performance for the quarter is another story. We doubled our Phenom and Challenger revenue while offsetting that with the kind of expected orderly wind down of our legacy flight activities. And so, when we look at the profitability of these aircraft, the unit economic profitability, we see the business model becoming self-sustaining. So we don't expect to need to, as you said, pump a whole bunch of additional cash into the business going forward.
Hey, George, on the Delta partnership, I'm just curious what that pipeline looks like from flying on Delta, known for a premium product, to then, spending a lot more money to fly private. What does that pipeline look like?
Yeah. So look, what captivated Delta's interest in this and what we've really been driving toward is this idea that private aviation, when delivered in the appropriate way, is an integrated extension of a premium commercial strategy. As Delta's gone on its premium journey, Wheels Up is a core part of that journey for its corporate and high value customers who access both modes of aviation. This idea of creating access to private aviation when you need it, integrated into a broader relationship that spans across commercial and private. And so whether we're talking to Delta's 45,000 corporate customers or that subset of their 20 million strong SkyMiles member base, so 0.5% of 20 million people is obviously a lot of people, it's 100,000 people. These are the folks that we're going to together, joint marketing, ultimately joint digital integration, merchandising, and so forth. So that's the plan that we're executing. So
what portion of Signature members come over from Delta? What percentage?
Yeah, so when we started this journey, the vast majority of our membership was a leisure membership base. We're now close to 50-50 in terms of leisure and corporate members. And that is kind of an optimal mix, right? You want your aircraft flying with your corporate members during the week and with your leisure members during the weekends and during holiday periods. And so this idea of smoothing demand through the week and through the year is an important part of our strategy as well. But corporate has been our fastest growing segment. We've grown corporate at 25% a year since we started this journey, largely, to a very significant extent, through our collaboration with Delta. And charter has also been growing at double digits throughout all of this. And this idea of delivering global solutions is resonating and very different than I think the narrative we hear from some of the other folks.
So Bloomberg loves numbers. So I have to just ask you. So can you give us a percentage of what portion of Signature members are coming over from Delta? Can you give us any kind of number?
Sure. So we are today. We have over 800. We launched the Signature membership in September. We crossed over 800 members at the end of the quarter. So about a third of our total members are now Signature members, with the legacy members converting over every day. And right around just over a third of those members are corporate members today.
Hey,
go ahead, Carol.
We have,
so many questions.
We love talking about this space. External risks. What worries you the most? Fuel costs, regulation, economic slowdown at this point. I mean, and you can throw in what demand looks like. We only got about 35 seconds.
Sure. Look, demand remains very strong. Obviously, fuel is a significant input cost. We're somewhat immunized from that through the ability to charge surcharges to our customers. We haven't seen a significant change or any real change in demand since fuel spiked on the back of geopolitical activities. The ultimate, I'd say, headwind to our business is always the macroeconomic environment and where markets sit. And obviously, the market's at all-time highs. People are flying a lot.